Good evening, thanks for joining us. This is NTD Business, and I'm Paul Graney. As the US goes full steam ahead with money printing, China wants its banks to cut back on lending. Will people starting investing in China instead? But with rates this low, it's almost never been cheaper to borrow money. We speak to a businessman whose unique business strategy has helped many entrepreneurs, and he says it works especially well in this environment. The crypto market hits $2 trillion. But is it really worth that much? That and much more coming up in NTD Business. Unemployment claims are on the rise again. The Labour Department says they hit 744,000 last week. That's after falling to about 660,000 just 2 weeks ago. It's much higher than economists predicted after the March jobs report showed the economy added 916,000 jobs last month. But it is still much lower than the 6 million claims we saw 1 week last year. And analysts hope unemployment will drop as more businesses open in the spring and summer. Some are expecting a hiring boom when that happens. More than 115,000 employed and gig workers, though, also applied for pandemic unemployment assistance last week. That brings the total number of people seeking help to more than 890,000. Unbelievable. Now, a growing number of states are saying you need to prove you're looking for work if you want to keep your benefits. North Carolina, South Carolina, Nevada, Idaho recently added a work mandate to the jobless benefits. The states say some or all recipients will now have to search for work or grow their skills. 19 other states have also brought back the requirement. States suspended the mandate after the pandemic forced states to lock down last year. Bad news if you're an oil worker out of work. It looks like President Biden's new stimulus bill will replace subsidies for fossil fuel companies with incentives for clean energy. NTD's Tom Ozimek reports.
President Joe Biden's new tax plan calls for eliminating subsidies to oil and gas companies and replacing them with incentives for clean energy. A Treasury Department report on Biden's Made in America tax plan says eliminating fossil fuel subsidies would boost government receipts by more than $35 billion over the next 10 years. The report doesn't specify which tax breaks would be targeted, but it does argue that the subsidies undermine the fight against climate change. It also says the subsidies undermine long-term U.S. energy independence, although it does not elaborate on this claim. Former President Donald Trump was a strong advocate of expanding domestic fossil fuel production as a path to greater energy independence.
And now, for the first time in 65 years, we are a net exporter of energy.
Under his tenure, the United States became a net exporter of petroleum products. The Treasury says the main impact of removing the subsidies would be on major oil and gas companies' profits. And it would have little impact on gas or energy prices for U.S. consumers. The plan is likely to meet stiff resistance from the oil and gas industry. The American Petroleum Institute said last week that Biden's plan amounts to new taxes on oil and gas drillers, and it would undermine the economic recovery and jeopardize good-paying jobs. Biden's clean energy incentives include a 10-year extension of the production tax credit and investment tax credit for clean energy generation like wind and solar. Tom Ozimek, NTD News.
It looks like America's manufacturers aren't too excited either. A study from the National Association of Manufacturers says Biden's infrastructure plan would cost 1 million jobs in his first 2 years. It says Biden's plan to raise the corporate tax from 21% to 28%, along with his other proposed policies, would cause the job losses and suppress overall economic activity. Last week, the group showed support for Biden's plan, just not his proposals to pay for it. It says Biden's tax increases would be a bad trade-off for the proposed infrastructure gains. And on Wall Street today, stocks rallied. S&P 500 closing a new record high, the Dow rising 57 points, 0.17%, S&P 500 gaining 17 points, 0.42%, the Nasdaq adding 140 points, just over 1%. Fed Chair Jerome Powell spoke today, didn't signal any change from the policy perspective, no real surprise there. Treasury yields continued to pull back, 10-year note yield at 1.62% now. Gold rose, oil pretty much unchanged today. The SEC is allowing Amazon shareholders to vote on a racial equity audit. Amazon had tried to block the non-binding proposal from being voted at the company's upcoming annual meeting. The proposal was first brought up in December on behalf of New York State Common Retirement Fund. New York's comptroller filed it on their behalf. He says the shareholder wants to look at the wages Amazon pays, the product it sells, and racial justice in the workplace. He says the goal is for Amazon to confront, quote, institutionalized inequality and how it impacts the business. Bloomberg reports that China wants its banks to cut back on lending. Policymakers are afraid of bubbles in the stock market and other imbalances in the country. Central bank says it's now tightening monetary policy and turning down the printing presses. It's a very different narrative than we're seeing in the US, where the printing presses are at full tilt. Stimulus packages, central bank support. It looks like it's going to continue that way. All else equal, investors definitely don't want to put their money into a currency that's being debased. But will that be enough to encourage people to invest in China instead of America? Ask Kyle Bass, Chief Investment Officer at Heyman Capital Management. Bass famously called the subprime crisis in 2008 and very closely follows developments in China.
When you look at the Chinese financial system, they are a totalitarian, authoritarian government. They do whatever they want to do, and domestically they can control whatever they want to control. If you remember, just at the beginning of last year, China notified the banks that 3/4 of their profits are going to be taken away. Even the public banks, by the way, in case you owned one, you lost 3/4 of your profits in one edict. And they were going to move those profits to the industrial sector that really needed help at the beginning of 2020. That's the kind of thing that happens over there. I think that the expansion of their central bank balance sheet, no one really knows how much RMB is in their system. They print it like it's the national pastime over there. So the fact that they're saying they're going to engage in some sort of tightening of policy is only because the policy that they created of free money, just like we did, as you know, has had the same response, i.e. asset values have gone up exponentially. The middle class can't afford to reach up, and the poor have stayed poor. So they're creating the same wealth gap there. It's wider there than it is here, actually. And that creates a lot of social tension within their country, and they want to try to minimize that. And as you've seen, if you get too rich in China, like Jack Ma, and too powerful, they will just take it back. And so those kinds of things go on over there all the time. As far as competition with the US dollar, look, China represents 1.8% of global cross-border currency settlements. But if you peel back the onion, you see that almost the entire 1.8% is China settling RMB with Hong Kong. And so they're trading with themselves. So no one trusts China. No one takes their money. The better question is, China announced just a couple of days ago that they're actually rolling out their central bank digital currency, their own digital RMB or digital yuan. That is a problem. And it is a problem because it has, call it AI, built into their currency. It's kind of like a Trojan horse. So imagine if you or I or anyone was forced to take digital RMB to trade or invest in China, which is probably one of China's moves. They'll know where you spend your money, how much you have. They will know all of your proclivities. And by the way, if you ever say anything negative about Tiananmen Square or Xinjiang or the Falun Gong or the Tibetans, guess what? Your social credit score just went down and they might turn your money off. And so this is a way they can export their digital authoritarianism around the world. And it's something that we must stop. So the RMB in its current state is no threat to anyone. The digital RMB distributed globally is a problem.
You're saying they could even do this to foreign investors?
Oh, absolutely. Just imagine a world where they require anyone that trades with China or invests in China to settle in digital RMB, and they force you to buy digital RMB with dollars, euros, yen, or pounds. And then you have it in your account. They can actually control your actions. You couldn't have a public conversation about Xinjiang. You couldn't have a public conversation about genocide or crimes against humanity, or even if Xi Jinping, if you think he's a terrible ruler, all of a sudden your global social credit score gets whacked and the Chinese can actually stop your ability to spend the money. So I think that the digital RMB is the largest threat to the world as it exists today.
You mentioned stopping it. How would you do that?
I mean, I think it's going to take a concerted effort amongst the West to literally outlaw, and we're going to have to outlaw the digital RMB. You can't only be partially infected. You're either infected or you're not. And I don't think that the digital RMB should be able to be distributed amongst democracies in the West. Period. Full stop. That sounds hyperbolic, but if you just take time to think about it, it is their Trojan horse of all Trojan horses.
Wow. Kyle Bass, Heyman Capital, thank you.
Thank you.
And the Commerce Department has added 7 more Chinese entities to its blacklist, citing national security concerns. The entities have supercomputing capabilities. That means much higher level of performance than just your regular computer. The Commerce Department says they're involved with building supercomputers for the Chinese military, including for weapons of mass destruction programs. Being on the blacklist means that if these companies want to buy from U.S. suppliers, they have to apply for a license from the Commerce Department. The new rules take effect immediately. Former President Donald Trump added dozens of Chinese companies to the economic blacklist, including telecom giant Huawei and top chipmaker SMIC. The supercomputing could be bad news for the cryptocurrencies like Bitcoin. Experts say they could be vulnerable to hacking by anyone with a lot of computing power. But it doesn't seem to worry the crypto bugs. The market just hit $2 trillion in market capitalization. But can it really be compared to big companies like Apple? NTD's Phil Zhou has the story.
The total value of all cryptocurrencies worldwide just hit $2 trillion for the first time this week. Some say that makes the crypto market bigger than companies like Amazon and Microsoft and puts it on par with Apple. But don't get ahead of yourself.
If I invent a coin tomorrow, David coin, and I sell one of them for $1 and I have 1 billion David coins, that doesn't make me a billionaire.
Crypto is a new technology that's exploded in popularity in recent years.
It's really obviously an asset bubble, and bubbles pop because you can't get any money out of crypto except by someone else putting in money to buy this thing. It's a hot potato, you know.
But some say it has a future as an asset, currency, or even both.
And while crypto, I would say, is probably more of an asset, more something like gold that people can buy, as opposed to currency or money which they use to transact.
Even veterans in the traditional currency space see its potential.
I don't think it's going to go away, and I think people are going to become increasingly both familiar and accepting of it as a trading instrument.
But it may need to keep evolving.
For these currencies to survive and to prosper, I do believe that there needs to be a connection to the real world.
If the IRS would tell me that I can pay my taxes in Bitcoin, that they're willing to accept crypto or Bitcoin, then I think that we're in a new world.
But he says he doesn't think that'll happen.
You will make money in crypto if you are a better shark than the sharks that are there already. Otherwise, they will eat you.
Are you brave enough to swim in the shark tank? Phil Zhou, NTD News.
Do you know you can invest in big property development projects for as little as a few $1,000s? It's called crowdsourcing property investments. The developer doesn't get finance from a big bank or big investors. Instead, lots of smaller investors will put up the capital and get a set yield on the investment for a certain number of years. It's an easy alternative for anyone who wants exposure to the property market. One of the online marketplaces is called CrowdStreet, a Portland company. I talked to the CEO, Tor Steen, and asked where he's seeing the opportunities for investors right now.
Coming out of the pandemic, we've seen incredible growth in the secondary markets. Markets that traditionally I'd call them flyover markets. Traditional real estate investing has been done a lot of times in primary, New York, San Francisco markets like that. But what we're seeing is a real concentration in these secondary markets, as well as from an asset type perspective, industrial opportunities, ground up development in multifamily, where there's been supply constraints in the multifamily segment in some of these markets, as well as other segments like medical office buildings and healthcare related facilities.
So why do you think the secondary markets have become so popular? Is it people leaving the bigger cities, coming inwards, or?
That is part of it, for sure, definitely. Part of it is a realization is that if you can work and don't need to be concentrated in a downtown metropolitan area, that you might have flexibility of where you work and where you live. There's people flocking to kind of these other markets, and places like Austin or Charlotte, Nashville. Storage is, kind of, it might not be the sexiest asset type, but it's definitely a stable one, especially when you look at people moving, people needing to use storage. Those are certain asset types that have definitely benefited. Hotel, obviously the travel industry related and retail related, obviously got hit really across the board. Other than maybe in the retail space, something that had grocery anchored type of retail, because with that more working from home, there was obviously a need for groceries. So any retail that had grocery anchored still was performing well, but other retail obviously got impacted significantly.
You mentioned multi-families. Of course, residential property is incredible boom at the moment. We see as well a lot of money from maybe institutional investors looking for a yield. They're also getting into the residential space. Is this something that you've seen as well?
Definitely, we're seeing increased interest in the residential space, and specifically as it relates to Crowd Street, the multifamily apartment. Really newer developments in that space. Class A, Class B as well, but a lot of Class A kind of multifamily. Another asset type that is also up and coming is build to rent. As the kind of millennials look to kind of maybe move out of an apartment but aren't quite ready, as an example, to move to a larger home. The build to rent phenomenon has really been a nice transitionary kind of asset type for that demographics.
Maybe you can go into that a little bit. What does that mean exactly for any millennials listening?
Yeah, the build to rent tend to be closer in, so they're not completely far out suburban, but they're closer into a metro area. But they would be a smaller home with a little yard, maybe a lot of community kind of features that they would have had in that kind of downtown core multifamily apartment building. So they don't give up those great features. Could be for the pet features that come in those neat apartments, or other community related features from those apartments will be in that same build to rent community, but they'll get a little bit more of a home feel. They might be just starting their family, so it's the appropriate size to have a 2 or 3 bedroom type of home. They can still rent it, but they can have that, and so have that continued flexibility.
Torstein, Crowd Street, thank you so much.
Thank you for having me today.
Maybe you don't want to give your money to someone else. You could always start your own business. Or one multi-millionaire business coach says you should just buy someone else's business instead. We talked to him about his unique approach. NTD's Colin Fredrickson reports.
I'm famous for turning $800 into $500 million in an industry I knew nothing about.
Millionaire Dan Peña says with every crisis comes some order and opportunities, and the pandemic is no different.
Interest rates, and I've been saying this for several years, interest rates are the lowest in 5,000 years. They're almost giving away money. It's unfortunate that a lot of people are suffering, but there are a lot of fortunes that have been made and will be made during the corona environment.
He's been teaching wealth creation through his Quantum Leap Advantage, or QLA, methodology for decades. Peña says his students have created over $1 trillion through QLA, and the pandemic is the perfect environment for the QLA formula. He says first build a dream team, which preferably includes retired executives within whichever industry you choose. He says everyone in it should know more than you.
We build a track record through a dream team. We get 3, 4, 5, 6, 7 other members, which get equity, free founders equity, and they're on your board. They're your dream team. And they have 150, 200 years of experience.
Next, he says to use money from financial institutions to buy businesses within the industry. The industry doesn't have to be one you work in.
We recommend to learn as much as possible before about the industry you want to get in.
But learn nothing.
Or rely on the technical
nothing. Are you deaf? Nothing.
Okay.
He says knowing absolutely nothing about the industry means you won't have preconceived notions, which tend to hamper progress. And to be clear, he says the method is about buying businesses, not starting them. And now is a good time because people are selling their businesses.
I've started businesses and I've bought businesses. And if we had a bar chart here, and you look at the money that I made, the business that I started, the chart would be down here. The businesses that I bought, beyond the screen, because you make a lot of mistakes.
He says you can follow him on LinkedIn and Twitter to see the results of case studies from successful entrepreneurs who followed his advice. And his message to people just starting out, whatever happens, don't give up.
Okay, I finished 2 minutes early.
What Apple is to technology, General Motors wants to be to the automotive market. Instead of just selling cars, it wants to provide diversified mobility services with revenue that rolls in monthly or quarterly from software and services. Conway G. Gittin says more.
Change. You can resist it, be left behind.
General Motors is trying to transform itself and taking a page from Apple's playbook, make a product, in this case an automobile, and couple it with a range of services that can potentially bring in revenues long after the initial sale. That transformation of the more than century-old company is already happening under the watch of CEO Mary Barra as it looks to tap into a growing auto services segment estimated to be worth more than $1 trillion. According to conversations between Reuters and several GM executives, an internal innovation team is developing new lines of businesses that could come with monthly or quarterly subscription fees that go right to GM's pockets. One such product that's already making headway? BrightDrop, a unit that will provide electric vans and related hardware to commercial delivery firms, starting with FedEx.
OnStar Insurance.
Another idea is to leverage GM's long-running OnStar vehicle communication service to sell other services that can be delivered over the air to vehicles connected to the web. For example, GM executives told Reuters its dealers could offer insurance policies to owners when they buy or lease a vehicle. Barra told Reuters instead of continuing to return the billions of dollars to shareholders in dividends and stock buybacks of recent years, she's going to use that money to invest in electric vehicles and hire the staff to give GM more of a Silicon Valley vibe. But it will have to overcome the many skeptics out there who doubt an old, stodgy automaker can transform itself into an Apple-like juggernaut and become a more formidable tech-forward rival to Tesla. And it's not alone. All the other automakers have watched Tesla zoom to the top spot as the world's most valuable car company and are in the midst of transformations as well, with a heavy focus on rolling out electric vehicles. Investors, however, sense an opportunity for GM to evolve and have pushed the stock up nearly 50% so far this year.
Still to come this evening, a new budget airline option for the West Coast, with one-way fare as low as just $19. And thinking about becoming a digital nomad? We take a look at what Greece is doing to attract remote workers from across the globe. That and more after a short break.
When the game's over and it's time to go home, sometimes your car has other plans. That's why I drive with CarShield. As expensive as car repairs can be, I wanted the best defense around. And with CarShield's administrators, they make sure that you don't get stuck with expensive car repairs like this. Did I forget to mention that with CarShield's network, I also get 24/7 roadside assistance, towing, and rental car reimbursement included. That's peace of mind every driver needs.
I saved close to $9,000.
If it wasn't for CarShield, I wouldn't have my car.
I gotta tell you, it's quite a relief not to worry about expensive car breakdowns anymore. And with CarShield's administrators, you can choose your favorite mechanic or dealer to do the work. Plus, it's easier than ever to get America's favorite car protection. There's no long-term contracts, and coverage is affordable for every wallet size.
If I didn't have CarShield, I would have been out of pocket $7,000. As a parent of 3, I couldn't have that.
I trust CarShield administrators because they paid my claim.
Talk about MVP protection for less than the cost of a ball game. Take it from me, the boomer. Nobody wants to go through the headache of an expensive car breakdown on their own.
If you're driving without a warranty, you have to call CarShield.
Yeah, you do.
So do yourself and your car a favor. Call CarShield. They're your best line of defense against expensive breakdowns.
CarShield administrators paid almost $4,000 for my repairs.
CarShield is wonderful. They saved me $1,300.
With CarShield, I saved $4,100 on my first repair.
Over 1 million happy drivers couldn't be wrong. Call CarShield now.
Protect yourself now against expensive auto repair bills. Call CarShield for a free and instant protection plan quote. Once your car breaks down, it's too late. Call 800-781-2990, 800-781-2990, 800-781-2990.
The U.S. has a new budget airline option. Avelo Airlines launched Thursday at Hollywood Burbank Airport. Avelo is offering routes between Hollywood Burbank Airport and 11 destinations across the West Coast, as well as Arizona, Montana, Utah. To kick off the service, Avelo is offering introductory one-way fares starting at $19 in all of its routes. The airline says flights start taking off April 28th. Might not be used for calls anymore, but the iconic British red phone booths are still popular. Check out this repurposed one in London. One can argue it's the smallest coffee shop in the city. Visitors can grab a tiramisu on one side, an espresso on the other. The barista says the well-known booths attract a lot of customers. And there might be more innovative redesigned booths coming soon as well. British Telecom is selling them to communities and entrepreneurs for about $2 each. Some of them have already been converted into mobile phone charging stations, mini smartphone repair shops, and even an online bakery. Also in Europe, Greece is pushing to attract a community of footloose remote workers. The country is hoping to revive its economy and restore its international image after more than a decade of crises. Eamon McCarthy reports.
Imagine working from home on a Greek island. Well, it's becoming a reality for a growing number of workers from across the globe, as Greece has become an unlikely hub for so-called digital nomads. Communications consultant Rowena Harding is one of them.
We can spend a lot more time in the outdoors here, like the quality of the air and the sea is really quite lovely. So the environment plays a really big part in how much you enjoy your day-to-day work.
From her garden on Aegina Island, Harding works with governments and charities across the globe. The push to attract a community of remote workers is among the green and digital reforms Greece hopes will revive its economy and restore its international image after more than a decade of crisis. Greece is also planning visas and offering a 50% income tax cut for 7 years for professionals who move there. 25-year-old Stefanos Bournias was born in Greece but raised in Bali. He moved from Amsterdam to Athens last year, working for a startup. He had previously been put off by the lack of opportunities, working conditions and wages in Greece. And as a foreign resident, he waded through layers and layers of red tape on things like opening a bank account. Although he says there's a high quality of life, his future in Greece is uncertain.
Well, I don't know how long I'll stay in Greece. Right now it's working for me. I'm really enjoying being here and I'm looking forward to things opening up to actually start to get to meet people and set up my social life more. But I guess I'll probably be leaving at some point in time.
Last month, the government outlined a multi-billion-dollar plan dubbed Greece 2.0, including investments in 5G to reinforce its attractiveness as a work location.
As the latest business updates for today, you can still catch NTD Evening News with Stephanie Cox at 6:30 p.m. Eastern. For NTD Business, that's all for today. Thank you for watching. We'll see you tomorrow.
have a new channel. Subscribe to us on YouTube at NTD News. Get the highlights of our news broadcast and the most important headlines that we curate especially for you.
Don't miss out on important news. Our videos are being deleted. So if you don't want to be cut off from honest news, take a moment to sign up for our newsletter at newsletter.ntd.com so you don't lose access to NTD. Go to newsletter.ntd.com to sign up for our evening newsletter.